Hello everyone and welcome to Macro Cafe episode 31. In today's episode we're going to talk about the monthly charts. We're going to review those. We're going to take a look at the S&P 500, the Dow. We're going to take a look at the dollar and the euro relationship with the emerging markets. We're going to take a look at some yields and Bitcoin and the Binance coin. I am your host, the Cowboy. This is Elliott Wave Cafe. Let's get started. Alright, so go ahead and follow me on Twitter. You can find me on here. Right here it's the name, and go ahead and join the community up here. I think we have interesting things to discuss. Sometimes heated, sometimes not, but I think you'll find value in what I post there, and you can be part of the conversation. So thank you for following me up on there. You can also find me on Telegram. I have my own pro trading room where we cover a lot of these macro assets. We cover altcoins and Bitcoin. We have a chat room, daily videos, presentation, early morning updates, throughout the day market coverage as well. So go ahead and give that a try if you want. All right, let's begin our coverage today. Let's take a look at the monthly charts. We've had some interesting developments here. I think the last Macro Cafe I've done was, about 2 weeks ago. We've had holidays and a couple of other things here, but let's kind of try to resume our coverage. We're taking a look at the monthly charts, and you can see Bitcoin here on the upper left corner. It's still a little bit bearish with a pretty bearish close for the month of November. We'll see if this will change in December. For right now, there's no signs of any reversal, at least at this time frame. The S&P 500 looks a little bit better with a strong close both in the month of October. We found the lows on October 13th. The month of November was also a bullish close. It looks like we're having a little bit of a continuation bullish hammering here. We're going to monitor what happens in the month of December, but I have some interesting charts to show you. And then the US 30, this is Dow 30 with even a stronger performance. We had a pretty large engulfing candle of the month of October, followed by a little bit less bullishness on the month of November, but something interesting nevertheless. We are making a little bit of a high in here in the Dow Jones. I'll put that in the context of the Elliott wave here soon. Nasdaq as well, with a couple of strong performance months in here as well, but much weaker than both the S&P 500 and the Dow Jones. Gold has had a pretty bullish November. It seems that it might want to reverse this trend. We're not going to talk about the counts in gold this week, but I have a couple of setups in here as well, both on the bullish and the bearish side, and we're going to look for confirmations on those. And then same thing on silver, with a nice silver has been pretty bullish, let's say maybe going back, what is this? This is the fourth month, the month of December, that started quite aggressive in here as well. A little bit of a reversal up here in the 10-year US notes with the drop in yields. I got some charts on that. The dollar as well has had one of the largest bearish months, in its history back in here. So we're dropping pretty well on the dollar. We've talked about the top in the dollar, several times starting at the end of September, and I was cautioning on that. And then US oil just kind of flat in here without a lot of, indications, either bullish or bearish. But if I were to guess, I think this pattern here suggests further downside coming into the oil markets. All right, let's take a look at the S&P 500. This is a chart I have posted on my longer term charts channel up there on Telegram, and this is on October 15th. And I think I've shared this with YouTube as well, but basically we were looking for an end of this wave A, of a larger wave Z, of a larger, let's say, triple complex move in here for the second wave that's supposed to take this whole correction back towards 3200 in the S&P, near its kind of 61.8 fib retracement. And we were monitoring the development of this wave B when we first kind of started to talk about it. So if you can kind of forward in here a couple of months later, here is the wave B that unfolded. And the market, staged a pretty impressive rally. I think we're still, below, let's say 78.6 retracement of this wave A. But if this is correct, and we have to give it the benefit of the doubt, we should start to unleash a much larger decline in a C wave that should come back towards this $3,200 level, towards the bottom of this longer term channel in the S&P 500, and upon its completion we should embark in a much larger bull market into the S&P 500. So I just kind of wanted to show you how just kind of a very simple idea here, where you were looking for an impulsive move to complete. You're noticing maybe on lower time frames that trend is getting exhausted. You're combining that with some news and with some, let's say, fundamentals, and a little bit of just emotional data and things that kind of happen towards the end of a wave when you get extreme bearishness in here. Then you're looking on the other side of the market. So the wave B rally unfolded, and the question is what happened next. You also have a little bit of a RSI divergence in here between this wave Y and this wave A, so which led to this pretty sharp rally. But if you notice on the weekly time frame, we're still below the 50 on the RSI. We kind of barely climbed back above it, and on downtrends, usually what happens is that RSI provides resistance at the 50 line. So I think we're at a big decision moment here in the S&P 500, either the beginning of a larger bull market and or at least a new all-time high, or the reversal lower back in here. So I think the decision is coming, and I'm curious which way it's going to pan out, just like you are. So taking a look, I don't think I have a lower time frame chart in here, but basically, I think there's probably a couple of more subdivisions here. I talk to my members about it every single morning, kind of how this pattern looks and what we're looking for and what levels and what confirms and what does it mean for this B wave to be near its finish. Now, if you're climbing, and sorry for coming back to this, if you're coming back about this 43.25, it's just like I've said in October 15, that would suggest that possibly the wave 3 primary is underway, which is this wave back in here, because you're starting to make, a higher high in here. And even though you could still kind of look at it as a flat formation, the likelihood of a bearish continuation are being greatly diminished. So that 43.25 is an important zone. Again, either you provide a complete reversal on the market, or at least maybe a second wave advance if this is going to end up, instead of a B wave, being a wave 1 from the bullish perspective. So a couple of interesting scenarios in here. And Dow Jones, that's why I wanted to talk to you about the Dow, because this one actually has overtaken those highs back in here, where we counted this as a wave A, from a larger a flat correction in here. So if you can notice this wave A, it's a leading diagonal in a wave A, then you're going a wave A up in an ABC. So this is at the intermediate degree, that's at the minor degree. And speaking of degrees, guys, I've just done a video, I think, at the beginning of this week, when I've talked about, how to properly label these charts and, what's the Elliott wave labeling, kind of starting from the highest, millennium and super millennium cycles, kind of coming down towards grand super cycle, then you're looking down to primary and intermediate and all of those. So just so you kind of understand what these labels mean. So we're looking, this is a primary, right? That's an intermediate, and then you're looking at the minor, and then you're going down from there to minute and so on, because it's very important to know which degree of trend you're basically studying. So right in here, right, we're monitoring a decline in this wave 2 primary, and within it we're thinking there's a flat correction in this intermediate A, B, down in C, in this parenthesis move. Now within that, that's a zigzag, because it's an A and then you have a flat in B. That's what I meant. So wave A, it's impulsive. Wave A, it's impulsive at an intermediate degree. Then you have at the minor degree, you have an A, B, C back in here, right? That's a flat C versus A, and then you're supposed to drop in this larger C wave of the zigzag. So if you can notice B versus A, which is this B wave back in here versus this wave A, has corrected about 61.8 of this entire move, probably just slightly higher than that, right? So that's the zigzag, that's this ABC. Within it, you have the flat, which is this back here, and these are the fib relationships between wave C minor, right, and wave A minor of this larger flat correction. And you're measuring basically in here, and you can see that wave C has traveled about 127% of wave A in this flat. Okay, and the higher limits for this would be about 138. I would not like to see it more than that. You can also go to 1618, but that would be, I think you're getting maybe fairly dangerous then to to this wave 1 top if that happens. So that's kind of how I'm counting this on the bear scenario. This was unleash, a massive decline in Dow Jones. In a wave C here, that would be the sharpest of all of these, right? Wave A was, pretty contained, and let's say you did have some sharp legs within it, but this wave C will be something that will scare a lot of people. So, based on this pattern, that's kind of what we're suggesting that it could happen here, and it's got a high likelihood of this happening because this wave 2 has not hit yet the 61.8 fib zone at about 25,371. Now, what would trigger such a thing? Because it seems weird to think that way because, you're starting to getting a slowdown from the Fed, right? It seems that we're kind of returning more towards a bullish kind of narrative in the market a little bit, and you got some participation from a lot of stocks, and the question is this a fake move higher in this wave B, or is the beginning of another bull market? So either way, if you pay attention to the chart here on the left, that's the bullish scenario where it looks that this wave 1, and I've just changed the labeling, doesn't matter, you can put it as a wave primary, or as an intermediate, as long as you're kind of following the procedures within it. So wave 1 intermediate, and then you have, the minor subdivisions back in here. So you're going in wave A, so you have wave A in here, and then you have wave B and wave C, and that completes the sequence, just slightly above the 50% retracement. Now you're doing a rally here, which is impulsive. That's why we're counting it as a C or as a wave 1. So if it's a wave 1, you're still going to have to get a little bit of a sell-off back to create a wave 2, right? And the depth of this and the formation of this, we'll monitor as it happens. There are some fib relationships. The way this unfolds could be a zigzag, could be a flat. We'll see how that pans out. But the idea is that probably you're going to come back towards 32,000 in the Dow Jones before you begin the larger advance, towards 38 and maybe 40 if this ends up being, a larger wave 3 advance in Dow Jones. So maybe just a little bit more upside into next week or something, and then I think, we're probably going to get a decline here in the second wave. So that's the difference between more of a bullish scenario. This wave C is very small compared with this wave A. It doesn't break any rules. There's nowhere that it says that this has to be equal with the wave A or anything like that. It just has to come in a zigzag. It has to come below this wave A low, which it did. And it looks like, it's got 5 waves in here. So that's kind of what we're watching, all right, in the Dow Jones. So very, very important, again, I'm providing details on this every single morning into our market updates and in the chat room up there in the membership, in the pro room. So let's continue and talk a little bit about the euro dollar. And I know I don't touch a lot on this, but I want to put this in relationship with what's going on with the dollar overall. And this is also a chart that I published in our long-term chart room in there, same time at around October 15. So this is just a couple of days after the market, I think, provided that bottom in a lot of these assets, or in yields, in stocks, in the dollar, pretty much everywhere we've had that October 13 low. So, and I was saying that this is a corrective decline, and this is a large WXY. You can see in here a very, nice complex pattern, hard to count and kind of, takes a long time to kind of go through it. But again, just a simple W through an A, big triangle in B, down in C for a W. Then you have a connector X wave. And then you have the next zigzag in here. So just a simple zigzag, A, triangle, B, down in C, connector, and then this is probably a flat, 3, 3, 5, and X. And then you have another zigzag in here, wave A, impulsive, up in B, and then down in this wave C towards, we stopped anywhere between 78.6 and 88.7. We did not hit this 161.8 multiple of C versus A, but it's still, we got in a pretty good reaction from when that happened. So we kind of knew that, we're running into the later stages of this decline, into the later stages of an advance in the dollar. And here is the next chart in here that shows you what a nice rally we've had in the euro since then. So now the question is, okay, is this done? Are we beginning a next sequence higher? It's possible. I mean, this is how it starts, and I think, it's got a high chance of this happening. Now, you still have, a lot of overhead supply, and there's still plenty of zones that have to be taken out, but we had a pretty good impulse of these lows, and this could be wave 1. And then, we're going to be looking for a second wave pullback, which means, lower in the euro, higher in the dollar, maybe over the upcoming couple of months. And then, then we should find our support somewhere on a fib zone between 50% and 61.8 of this retracement, and then start to break above this, I think pretty important resistance zone in here that goes back to 2015, 2017, all right, and then, 2020 as well. So, and if this euro dollar pattern is complete, then the dollar will get killed, and, we're probably beginning a maybe multi-year, couple of decade weakness in the US dollar, if this pattern is done. Because, once you're getting above this B wave, right, you start to have confirmation that actually, yes, the dollar is beginning a lot. I mean, this will take time. You're probably going to be up in, who knows, 2024, 2025, by the time you're maybe reaching up into these levels towards 125 in the euro dollar. And then, then you probably get a retracement, right? So you're probably talking about a 5-year, move out of here until you're basically reverting back and creating. I would just want to show you this, right? Let's say you go 1, 2, let's go 3, 4, and 5, right? And you're coming back towards these levels. By that time, if this follows this, I mean, it's pretty aggressive. Even if you're like letting it slide a little bit more, you're probably going to be by 2026 or something, right? So 3-4 years down the road, then you're probably going to start to come back and maybe have another sell-off. And then you're only going to start to kind of revert higher. So these things in the currency market take a lot of time, and you just got to be patient. But there's a lot of opportunities inside these legs to to trade on the right side of the market. So very important kind of what's happening here in the euro dollar. And then here is the relationship with emerging markets. Pretty big sell-off. One of the other things that kind of tells me that we're probably going to get a little bit of a pullback in the dollar and the drop in the euro, it's that we're actually right at the 200-day moving average. And the move in the dollar here is probably, could be a flat, so there's probably going to be a fourth wave. I apologize. It's probably going to be like a fourth wave and then a drop in a fifth wave and then a correction. So I think we're coming into the final stages of this decline. Also, you're approaching this spike, from the COVID March. And that's at about 104. We also know that about 100, 101, it's also a big resistance, a big support. You have this previous fourth wave that I think kind of got taken out, and then you have the next level at about 102. So anywhere between now and 102, I think you're going to start to find pretty decent support. And look at the emerging markets, right? I've touched on this in previous videos as well. This is when you're buying emerging markets, because if the dollar weakens, And this was basically the whole decline in EM. Then this 34 level should not get taken out. You will probably going to get a little bit more of an advance here, maybe almost done, back towards this high, then come back a little bit, and then begin the next advance in the emerging market. So I think there's a lot of interesting charts in there and opportunities in those markets. All right, so this is my view on the dollar. Let's take a look also at the yields really quick. This is another chart that I posted on October 15 as well. I said that the 10-year yields are an impulsive structure. We should be near completion on this wave, 5 intermediate of a larger third primary, a corrective wave 4 at the primary degree of trend is expected next, anywhere towards 23%, which we have already hit, I think, up to about 3% yield, which is a 38.2 standard correction for fourth wave. So I was cautioning on that, on a drop in these yields, and the drop came. We hit about 350, so that is already 23.6%. But I still think there is a fourth wave to be formed in here. I don't think the structure appears complete just yet. We'll see. I mean, a big drop will be towards 250. It's possible that with the latest talks of recession, maybe a slowdown in the economy, things like that yields could revert quite seriously. We'll continue to kind of monitor that. But for right now, I'm thinking, let's say anywhere between 3 and 2.5 on this kind of correction, and maybe then bounce back and do more of a triangle in here, or a zigzag. You can get anything you really want in a fourth wave, right? Because you can also have a triangle in there. But interesting drop in yields. This is obviously helping the dollar, right? It's also helping, obviously emerging markets. It's helping gold. It's helping equities. It's not helping crypto that much yet. Maybe in the future, but the drop in yields, it's important. And then we're kind of thinking about it in also in terms of economic weakness and the relationship with the stocks there, because just because if you drop in yields, it doesn't mean that you're going to go to the moon in stocks, right? This could be an indication of upcoming recession, maybe a deep recession back in 2023, 2024. If you're looking at the yield curve, right, that's still heavily inverted. So, that's the idea on the yields market. I trade this actively in my program as well, and I kind of let the members know when I buy and sell this. I like the 2-year notes. I like the 10-year as well. But I trade those via futures. I think those are good instruments to trade. They're pretty stable and pretty they got good levels, and you kind of know what you're getting there. So anyway, that's the 10-year, and then we're going to close off by taking a look at a couple of charts here on Bitcoin. I just posted this one earlier this morning on Twitter, and I can't help but notice that we're obviously in a large decline in Bitcoin. We've corrected 72-73% already. With the drop here almost towards 15K, and multiple, and obviously it's much easier to kind of look at this in hindsight and look at how clean some of these patterns were, and every time you broke below one of these levels, you're starting to begin the next decline. And this is the triggers, right? You're looking, let's say, at the corrected move, some kind of an ABC, some kind of a WXY, some kind of a triangle, and traditional market technical analysis, right, calls them bear flags or pennants or stuff like that. But you could see how you're basically getting huge bearish drops every time you break below these levels, and that's the signal, right? So it happened here, it happened here, it happened here, it happened back here, and now we're these moves are getting a little bit smaller. And it could be that Bitcoin it's near the end of this decline, but there's no evidence yet on the chart that that's the case. And one of the most important pieces of evidence is, just like I've showed you on the Dow Jones before, is that you overtake, one of the swing highs, and you're starting to make, instead of lower highs and lower lows, you're starting to push higher towards a higher high and a higher low. And that's not the case yet in Bitcoin. Bitcoin has, heavy resistance up on this line back in here towards 19,000. That has to get taken out. first, to start to think that, yeah, you probably have a low in Bitcoin. Then you have to go back towards 21,000. And I've just done a video, just short video on that as well on YouTube, I think a few days ago, when I looked at kind of how you can bottom in Bitcoin, basically, right? You got to go back up there, then come back and retest this area one more time. And it doesn't have to be this exact, specifically, but, this is kind of, in my view, what it would mean to have a reversal pattern, right? And I saw some charts out there about Wyckoff and kind of how this whole plays out. The question is, there is no evidence yet. There's no evidence that the Bitcoin has a low, right? Other than the sentiment that's out there that was extremely bearish, other than the fact that, you've had, multiple capitulations and multiple bankruptcies and collapses across the field, it doesn't mean that that's the exact low, or it could be the low, but it could still take a long time for this to kind of still kind of find itself, to kind of digest this whole information. So that's kind of what I'm looking for. I personally think that there is another drop coming. I don't think that this is a bullish development in here, even if you're able to rally a little bit more. I think that rallies here will continue to get sold. There's pressure on this market, and I think it's probably going to break lower below 15,000, maybe move towards 13 to 12K. And the reason I say that, it's by looking at this chart on a longer time frame. We're looking at Bitcoin as a wave 1 cycle completed back in here. You can change this if you want to a super cycle, but its history is not that long to put a super cycle in there, I think. But anyway, just a primary move back in here in a 1, 2, 3, 4, and up in 5. And since this is an impulsive move that probably completed through this double top here at about 70,000, you're looking now at the wave A decline followed by a B. Soon after this wave A is done, this could, double or triple maybe Bitcoin in price once it happens. And then you're probably going to get another C wave decline. And at least that's what I'm thinking at the moment. When I see a 5-wave decline out of here, I know there's talks out there in the Elliott wave community, and people like to count this as an A, B, and then down in a C wave. Being a 4th wave, this is the top of the wave 1. I think we're very dangerous, very, very close to that for this to be a 4th wave. And also, I do not like the way this structure. I think it's not a good form. It's not a classic form of a flat. It's very kind of forced, in my view, to count this as an A, B, down in C. So, it is what it is. If you don't like, this particular count, I don't have a problem with it. You can stick with an ABC. It probably suggest that still there is a rally coming no matter what, either after this wave A finishes or a wave C finishes in here. The question is, is that going to lead to new all-time highs coming in Bitcoin, or it's going to be just a B wave, a rally in there. So here is the support line right back from 2019, from 2020, 2021 back in here. And I think those levels are probably going to get tagged. So be careful with Bitcoin. I think, it still needs to be confirmed by some stronger upside moves, and from a proper bottoming process that needs to happen in there. Also, I wanted to kind of close off with BNB. I know people were getting very excited as this was pushing up above 395, 400 in here, and I caution against that. I said I think that's probably just a 3-wave rally in there. The way the markets were looking overall, we pushed back, and I just kind of want to draw your attention to something, right? When a pattern that's moving from the lows, and you're still in a downtrend, and it's doing a 3-wave move. I personally, look at it as something that you have to believe. You can try to force a bullish count in here in a 1 A, B, C for a flat, right? For an expanded flat in this case, because you would have wave 1, wave, and then an A, B down in C for an expanded flat, and that means a huge rally. It's coming. But see, now that is, I think that is a secondary count, right? An alternate count versus kind of what's exactly happening on the chart. And what's happening on the chart is that you have a three-wave move, against an ongoing decline. And in my view, that suggests that lower prices are coming in Binance going below 183. I could be wrong, as I've been many times, but I think that it's a pretty beautiful, clean ABC pattern. And it suggests that maybe it's just an X wave, and this was maybe like an ABC X, and then you have another ABC coming. Okay, so I will not rush to get super bullish on this. Now, yeah, if you break back above that line, and if you start to break back above these, swing highs back in there, then you can probably start to think that new highs are coming in BNB. But this pattern in here, and take a look at the weekly time frames. I know, we love smaller time frames, but anywhere, above daily, 2 days to a week, a couple of week charts, these patterns are much nicer visible, and, they can keep you on the right side of the market. Okay, guys, thank you for watching. As always, I appreciate you being here. Thanks for subscribing. We're continuing to grow quite aggressively here on the YouTube channel. Multiple views, multiple subscribers. Hopefully, the learning, channel or playlist that I have, continues to get hit, because there's a lot of good information in there, I think, and people seem to like it. So anyway, I appreciate you. Go ahead and visit me in the pro room if you want to be part of my trading gang in there. And receive morning updates and daily video reviews, and trading opportunities, and learn about Elliott Wave. And there's a 7-hour course and all of that. Go ahead and give that a try. But as always, I appreciate you, and I will see you on the next one. Bye bye.